Hello, everyone. Welcome to nationsindexes.com. We're the world's leading independent developer of volatility and option cost indexes. We created our suite of indexes to help you quantify what has been subjective, to allow you to trade with data, not just a hunch, to recognize trading opportunities that were hidden before, to create superior trade structures, and finally, to help you become a better, more profitable trader. Let's find out how we can do that. One problem that every option trader has is a lack of consistent, objective insight into how an option market is changing and which specific options, or range of the option skew, are being bought and which are being sold. And let's face it, if traders are focused on buying puts, or a range of the put skew, that's something you as a trader would like to know because it transmits specific information. If they're buying calls instead, that transmits very different information. It is never possible to know exactly what a trader's motivation is or how a trade fits into their overall position. But with the right tools, it's possible to know how their trading is impacting the market and to take advantage of it. Before Nations Indexes created its suite of volatility indexes, the only measure you had was VIX. But VIX uses nearly every out-of-the-money option listed and incorporates all those inputs into a single value without any transparency regarding what particular options or portions of the option skew are doing. That's like having a market with a broad range of stocks, but only being able to see a single value. Maybe the level of the S&P 500, instead of knowing what individual stocks and sectors are doing. You wouldn't put up with that, would you? Then why put up with it from your volatility index? Now that we know that it's better to have more information and insight into what each portion of the option skew is doing independently of all the others, and that it's possible to vastly improve your understanding of current market dynamics, the question becomes, how do we do this? At Nations Indexes, we do this when we deconstruct skew. How can we deconstruct skew? At Nations Indexes, we begin by looking at the four important regions of the Equity Index Option Skew. The first of those four regions is made up of at-the-money options, which are those options which have strike prices very near the current price of the underlying asset. Nations VolDex measures the cost of options in this region. The second region is out-of-the-money put options, which are those puts with strike prices which are below, but not too far below the current price of the underlying asset or index. These are the options that traders might use to express bearish sentiment, or that an investor might use to hedge downside exposure. Nations PutDex measures the normalized cost of these options. The third region is deep out-of-the-money puts, like those used to protect a portfolio from a tail event. These options are very unlikely to be in the money at option expiration, but they're an important barometer of fear or concern on the part of investors. Nations TailDex measures the cost of these options. The last region is out-of-the-money call options. These are the call options with strike prices, which are above, but not too far above the current price level of the underlying asset or index. Nations CallDex measures the normalized price of these options, and it offers a window into the degree of bullishness of the broad market. A fifth potential region might be deep out-of-the-money call options, but in the equity index option world, they tend to be extremely cheap and are not particularly important. You'll note that while we're deconstructing skew, we still manage to cover the vast majority of the option skew and all the important parts of that skew, while also distilling unique insight. Let's learn about the Nations CallDex Index. CallDex measures the normalized price of call options which are one standard deviation out of the money. That translates to a call option with a delta of approximately 16. So these are the sort of call options speculators might buy to express a bullish point of view, or that an investor might sell as a covered call. That constant moneyness also means CallDex always maintains its context. The tenor of the standard version of CallDex is 30 days, as it is for our other indexes, but we also calculate a 7-day version of CallDex for those times when an important catalyst is looming and to help traders who prefer shorter-dated contracts. And again, as with all our indexes, the standard deviation threshold is calculated using current at-the-money option prices rather than stale historical data, which is probably no longer relevant. Let's learn how CallDex is calculated. As you can see, we begin the calculation of CallDex by using bid and ask prices in at-the-money options to calculate the CallDex threshold. Calculating the relevant threshold is the first step in the construction of many of our indexes. The threshold calculated using these options is the asset price that is exactly one standard deviation above the current at-the-money price. This means CallDex remains relevant since it uses up to the second option prices and never uses stale historical index levels to calculate the call threshold. See, you can already trust CallDex to provide unique insight, and as an aside, one standard deviation out of the money corresponds to a 16 delta, so CallDex exhibits consistent moneyness. Then CallDex uses the call options just above and just below this threshold, these options here, to calculate a normalized 30-day call option price. Since you now have a dependable index with understandable context, you're trading with greater insight. For too long, option traders have been forced to guess or trust their memory regarding how expensive call options are. But that means they sometimes compare different degrees of moneyness or different times to expiration. CallDex standardizes those issues so you can compare historical values of CallDex to its current level to get deeper understanding of the state of the option market you're examining and craft better trade structures. It also means you can compare CallDex on one underlying asset to CallDex on another, and consider relative value trades which take advantage of what used to be impossible to see. CallDex has been providing real-time insight since 2014, and its history goes back to 2005, meaning it covers a broad range of market cycles. As you can see, the CallDex Index increases in value during times of greater realized volatility, along with all option prices. But when compared to other measures, it can help you gain deeper understanding. This allows you to take advantage of our unique insight. Here you can see important historical statistics for CallDex. This will provide context and help you trade with data, not intuition or hunches. No more saying to yourself, "That seems high" or "That seems low." Now you'll know, and you'll be able to use that information to create superior trade structures. And at Nations Indexes, we calculate CallDex on a wide array of underlyings and make those index values available to you so you gain insight into equity indexes, treasury bonds, Bitcoin, precious metals, and the most dynamic stocks in the American stock market. Many traders like to use CallDex to create relative value trades, either between indexes or among the equity names we cover. This is possible because we quantify what used to be hidden from you. Let's look at some CallDex index values to see how a trader might have used them to create relative value trades. Here you can see historical CallDex values since the beginning of 2022 for 3 important equity indexes. We'll reveal which 3 in a moment. But look at the relative moves and occasional divergence between the 3. Isn't that objective data you would have liked to have at the time? You can see they moved in unison in 2022 before diverging in the last half of 2023 and then again in the middle of 2024. Think of the ability to use that data to see what had been hidden and, most importantly, to take advantage of it. So what are these indexes? In blue is the S&P 500, in turquoise is the NASDAQ 100, and in brown is the Russell 2000. Nations Indexes, better ideas, better indexes.